Good morning, everybody. Welcome to today's edition of the 9 a.m. Spot. I'm Bruce Singer. We have a great guest. First, we'll do the introductions. Again, I'm Bruce, and what I do is help companies with cash flows, cash management, by providing an effective CFO on a part-time basis or contract basis. That is the space that I play in. And I'm proud today to have my guest, Mark Feigenbaum, who's loaded with talent. Okay, Mark is an attorney. He's a CPA, actually FCPA in Canada. He's a CPA in the U.S. He's an attorney in the U.S. and a lawyer in Canada. He has a practice in Toronto dealing with cross-border individuals, corporate taxes, consulting, tax returns, and his firm also does cross-border estate planning, wills and trusts, and pretty much everything to do with Canadian U.S. tax and cross-border. Mark is the expert in this area, bar none. He's been out for a long time. I've known him for 25 years, so it's going to be a pretty interesting discussion. And Mark, just get into it and just please add something, and we'll fire away. You know what I mean?
Well, you set the bar pretty high there, so I'm going to have to jump a little bit higher than today.
Yeah. Okay. Great. So, Mark. Yes. So, please, you said you were saying yes.
No, I was saying that I'd love to talk about expanding into the U.S. today, because I think I'm getting a lot of calls lately about this, particularly online selling. The U.S. is a big market, and Canadians want to sell there.
Correct. Okay, so if we want to start selling our goods, our products into the U.S. market, what are some of the tax considerations that we need to watch out for and consider?
Well, I'm going to split this into kind of two different taxes. There's tons of different taxes in the U.S. and tons of different jurisdictions. Some taxes are by county, some by city, some by state. So we'll talk today about, I think, income taxes and sales taxes, because those are the two big ones you really got to look after.
Okay. So let's talk about income taxes.
Okay, so income tax, again, I'm going to talk about the U.S. side of it. The U.S. taxes based on what we call a trade or business, and there's no real definition with a lot of these things in the tax rules, so we look to cases and things. And our trade or business is pretty much doing anything in the U.S. and you'd be subject to U.S. tax. But the deal between Canada and the U.S., though, is that we can raise the threshold a little bit. So not just doing anything in the U.S. causes tax, but we created a new threshold we'll call permanent establishment. And again, not very good with the definitions, but those are things like having a permanent location down there, a warehouse, that sort of thing, that would cause us permanent establishment.
Okay, so what's the difference between, what does it mean, like a permanent establishment income? Like, what does that really mean? If our goal is to not pay U.S. taxes federally, and then we'll talk about the state in a second, now we would have to reach this threshold to be able to be liable to pay U.S. tax. Now, just to be clear, though, to reach this new higher level threshold, we would have to file an election with the U.S. saying that, hey, we're Canadian. Under our treaty, we don't pay tax when there's a trade or business. We pay tax when we have this permanent establishment. We don't have one, so sorry, there's going to be no tax from us. So we need to establish that first. Are we going to be liable for tax or not going to be liable for tax? So what are some of the things you think the Canadian companies should consider? Like when a company, I guess when someone consults you, like they have to set themselves up for success, right? Mm-hmm. I guess that's it. So what should they consider? Like, what are the key considerations? One obviously is the establishment.
Right. Well, I don't dictate what somebody's business is. I have them tell me, how do you want to get your clients? How do you want to sell? Are you going to have an agent down there? Are you going to sell online? Where's the merchandise coming from? Is it a service? So I look at their business, and there is no real cookie cutter. But once we establish if there's going to be tax or not, then we have to go into another path saying, okay, we have some sort of taxable event. Are we going to set this up as what we call a branch, where we're just going to operate out of our Canadian company, or are we going to set up as a permanent establishment, where we're going to set up a subsidiary, and then are we going to trap our U.S. taxes? Operating a branch sounds a lot cheaper in the beginning because you don't have to set up a separate company, but the tax rules are very complex, and you may end up worse off in the long run. So everybody has to be treated a little bit differently.
So it sounds like every situation is unique. And
yes, no, very much so.
It's very unique, and if it's not planned properly, it could end up being very costly.
Yes,
Yeah.
especially with the states. I didn't talk about state income tax now. State taxes
Yeah.
involve separate rules for all the 50 states in the district. So every state you work has, so I'm going to tell you the vague rules, but every one is a little bit differently, and they're very aggressive for collecting revenue. So even if the federal government isn't as aggressive and maybe not see what you're doing, the states will. And so we need to consider, are you operating in a state or a particular state or all the states and that sort of thing. There's a different concept with state taxes, and that's called a concept called nexus, and how we have a connection to that state. Do we have people in that state? Do we have an office in that state? Do we have assets in that state? And every state has its own rule for nexus. And once we create that connection, then we have to allocate our revenue to that state using every state has its own formula for allocating the revenue too. So you could file 50 tax returns possibly. And so it's a little bit of, not to scare anyone off, but there's a little bit of compliance there.
Yeah, but I want to curious, but now we're in this virtual world, okay? That's going to open up a whole new can of worms. Like I'm an expert in US, but how's that going to work? Because everything's all over the place. We're in a global world, this virtual world. So I'm a Canadian company selling US virtually or selling services. How does that, I guess the question is, can we tell the audience about that, the impacts? How does it even work?
I think it makes some of it a little bit easier and some of it a little bit harder.
Yeah.
Easier in the fact that if everything's contained in Canada and your website's in Canada and you're shipping everything from Canada, you probably don't have as much connection with the US than you used to when you had to transport yourself and produce the goods in the US. And again, every situation is different. But with I think with the virtual world, the biggest thing right now is sales taxes. And sales tax is a whole other area of tax, which once we've established the income tax are, this is what we're just kind of the agent of the government, collecting it and then remitting it. And in the US, it's more like our old PST system where it was on products and things. But that's a different kind of nexus. So we can have no connection to the state for income tax purposes, but then we have a connection for sales tax purposes. And there's no federal sales tax there. Every state, and in the US also, almost every state every county has different sales taxes. So usually we want to get a service to figure all this out, but what we do is we establish where you have connections. It used to be fairly easy until some rules changed recently. In that if we didn't have this nexus with the state and we shipped to that state, we didn't have to collect sales taxes. So I have a warehouse in New York State, and I was shipping to Massachusetts or Missouri or something like that, I wouldn't have a sales tax obligation. And so any state that had a warehouse or something, and I would have shipping in that state an obligation.
But if you're shipping from Canada to, let's say, Massachusetts, but you don't have a warehouse, that's different.
Yeah, so that probably wouldn't have a sales tax obligation because we're going out of state. They have what's called, and when we do that too, it's called use tax, where they're supposed to voluntarily pay the tax because they didn't have it taxed on them. And I'm not sure the compliance with that. In Canada, we have a use tax, but the Canada Post collects it for us. So they collect the GST on stuff from the US.
That's right.
But, yeah. So, and now why I said this kind of changed, I'm being a little bit vague, is because there was a really important Supreme Court, and tax cases rarely go to the Supreme Court, so this was very interesting. And it was actually the big box stores kind of got together, let's say Walmart, I don't know, they were one of the people that were mad, and they were saying it's not fair that online retailers can sell the same product to someone in my state, and this person's going to pay less than going to Walmart in my state where they have to pay sales tax, and it's not fair. And so the government of South Dakota put in a law in place saying that if you have more than X number of transactions, then you have to collect sales tax even if you don't have a connection. And one of the big online companies called Wayfair, they're like consumers distributing or Amazon kind of thing. They took this to court and went to the Supreme Court saying that's not fair because the Constitution says that I can sell stuff and the rules say that I can sell stuff. And the Supreme Court said, no, it was okay. The state could make that kind of law. So now all the states are getting on board making these laws that if you have more than a finite number of transactions in that state, you have to collect sales tax in that state. And there's about 30 states now that have kind of jumped on that bandwagon. So now we just became from very easy to a little complicated again, because now you could be selling from Canada to that state and still have to collect sales taxes before you wouldn't. So we have to be very aware of that.
Interesting, because it seems to be getting more and more complex.
So a lot of people, what they're doing, they're using services like Amazon. I'm going to say the bulk of my questions that come in lately have been, how do I sell stuff on Amazon? And obviously, Amazon is they facilitate the transaction really. And one of Amazon's services, and I've never sold anything on there, so I don't know particularly, but from dealing with the clients, so one of the services is they collect sales tax and remit them for you. And so that's for especially smaller kind of businesses, that's a good way to get in. It's give them the percent and let them deal with all the sales tax, and you can just deal with the income tax side of it.
And does Wayfair do the same thing? Wayfair? Could you mention Wayfair? Wayfair operates similarly, I think, right?
I don't know if they have private deals with how they collect their goods, but Amazon has these where you can be a seller on Amazon and create your own little store on there, and they and so there's services. The thing with Amazon, though, just from a lot of experience in dealing with clients who want to sell on them, is they generally will only deal with a U.S. company. So it might involve you setting up a U.S. Company. And then dealing with that, but that can all be managed, and I'd help people with that sort of thing.
So can you share in your experience a situation or situations that would cause like minimal tax and compliance? What's one or two typical situations?
The best case situation, I think, would be is you provided an online service from Canada and never went to the US. So that's your best case. Everything from there is going to be a little bit more thought put into it. Now, if you're going to start with goods, where are the goods coming from? So if you had goods that come from overseas to a fulfillment center that you don't control at all, let's say that the goods go right to Amazon, all you do is put your name in there, they collect the revenue, they collect the sales tax, they do everything. That could be your easiest situation. That being said, they take a chunk of your profit, so there's a cost benefit to that.
Interesting. And what about things like, I'm just curious, what about things like direct shipment? Like, is that part of it? Let's say you buy from Canada. That's direct
shipment. What they are called fulfillment centers. And fulfillment centers are where you submit your to this kind of company where you give them your sales list and what products are going and the addresses are going to. All the goods come to them directly from the manufacturers. They box everything up and ship it out. And interesting with fulfillment centers, some states, if you were to use a fulfillment center, create nexus in that state, and some don't. And I'll give an example. New York State, for instance, having a fulfillment center there doesn't create nexus. So when we were kids, we saw the seen on TV things on TV. They always seemed to go to Grand Island, New York, and New York State because those are fulfillment centers that didn't have nexus. If they were to do it in Pennsylvania, they would have to pay Pennsylvania tax doing that.
Huh. Interesting. So I have someone asked a question here.
Sure.
Will we need to pay U.S. tax for software app income for companies using software in Texas and Florida, but the file servers are located in Canada?
So that's a good question. That's kind of like my best case scenario.
Yeah.
And that is is you have everything contained in Canada. You've licensed software to use in another state, and you've got no presence there at all. They're just online in your servers here in Canada. That being said, several years ago, I went to court in California for a company that sold software, and they had a rule in California that if you were to, it's called a technology transfer, and they've changed the law since then, so it's not an issue now. But just selling the software in California created sales tax, and they never collected the tax. And California came back and wanted for all the years prior of every sale they made to California sales tax. So you do have to be very aware of what your state you're selling to and what the rules are.
Interesting. And what about things like professional services? How would that work?
So professional services go by where you stand when you do the work. So if you go to the US and stand there and do the work, then you're looking at US source income that you're going to have. If you do the work from Canada, standing in Canada, even to a US client, then it's not US tax attached to that. And services don't have sales tax.
Oh. So even if it's virtually doing the service, like in your company, like you obviously service people that are living in the US, right? So is that you're sitting in Canada? That's the rule. You're sitting in Canada physically.
Yeah. So I don't pay, other than me being a U.S. citizen, I wouldn't pay tax theoretically in the U.S. based on that.
Huh. Interesting. And I'm just reading through the questions here. You know,
Sure.
I'm reading through questions. Are there sales taxes on services such as coaching? Well, different question, but maybe it's similar. Are there sales tax on services like coaching or consulting that are sold and delivered from Canada, all living on virtually by phone or Zoom? I think you've answered that. You know what I mean? And
Yeah, so there's another question really on whether you have to, which could be another conversation of whether you have to collect GST or HST on that service for Canadian tax purposes. And again, it depends if the user of the services is non-resident for Canadian tax purposes. So don't forget, there's always two sides to everything. And I've kind of been isolating on the US because that's the unique thing you want me to talk about, but we also have to look at the Canadian tax side of this too.
Yeah. Interesting, very interesting. You know what I mean? And what about, I'll one question. And so I got tongue twisted for a minute. You know what I mean? Are there any other scenarios that you want to share with people that are interesting in terms of, like, again, it's really focusing on tax minimization. Like, let's talk about corporate tax for a minute.
Yeah.
Okay. Like corporate. Is there any scenarios that you can share for a small company that sells a product, anything like that in the corporate world?
Well, I would give, and I'll talk about corporate as if you set up a US subsidiary, because if you were to do it from Canada, then you have to pay just Canadian tax. You may have to pay what's called a branch tax. That's what I'm talking about. It's very complicated. So an easier thing is, let's say set up a US subsidiary, a US corporation. Well, then you'd pay corporate tax in the US, which used to be very high. And then a couple of years ago, they dropped the rate considerably. So now our kind of models of what the cheapest way to do things is a little bit different. The real concern comes to be, how do you get that profit back up to Canada? Do you pay it by a dividend to your Canadian company? If you do that, there's withholding tax. So there's, and then how is that dividend income treated in Canada? Is that exempt surplus? So you need to create, before you start, a model of, you earn $1,000, where you're doing your work, how much do you get to keep in your pocket at the end of the day? And we do these kinds of different structures and then use the same $1,000 and see which one to keep the most. If I were to give one tip, a free tip for everyone, in the US, if you go to somewhere or by yourself to set something up, they use commonly LLCs, limited liability companies in the US. It's very common in the US because they're taxed like individuals. And as I said, corporate tax is a little bit more onerous, or used to be, than it is now. If you use one of those as a Canadian resident, you will very, very not like the result. And so you don't get talked into doing an LLC. You have to look at a bigger comprehensive structure of looking at Canadian tax. And a lot of the US advice you might get does consider the Canadian tax aspect. So just don't do an LLC as a general rule, and work on other structures.
Interesting. Is it mandatory to do US, another question came in, to do US IRS reporting for services rendered in the USA?
Okay, so how the reporting works is, if you do a trader business and you're claiming that under the Canada-US treaty, I don't have that trader business, then you do have to do an election. We call them treaty-based returns, which says that, hey, Canadian, this treaty, I'm using the treaty saying tax doesn't apply to me, and then you just attach that. So that's possible. Doing a service based in Canada, like again, we're talking not goods, but services, I think you'd be less likely to have to every situation is different, but doing a service in Canada, you'd be less likely to have to follow anything.
Interesting. And what are the penalties if there's non-compliance for this type of reporting? Is there penalties?
Well, what the kind of law is, and I don't like to scare people because I've never seen it applied, is if you don't file this return and they find out later you should have, saying that you're electing under the treaty, then they don't let you make the election and make you tax as if you were all US trader business, and don't give any deductions. Like I said, that's in the law. I've never seen a case where that was actually applied. But you have to think the way the system works in the US is they call it voluntary compliance, and they're very much in the honor system. The audit rate is very low, but they mitigate that with very, very, very high penalties, and they make it very public. And so it scares people kind of into, so voluntary, I don't know, voluntary compliance, but it's scared into.
I'm curious now, when it comes to the other way, US company, what about I'm curious, US companies selling to Canada?
So we have the same treaty, so they can say that they don't have a permanent establishment in Canada, and that they don't have to pay Canadian tax, and just file with the CRA at T2 with the election saying that I don't need to pay tax, and that works as well. A little bit trickier because HST and GST, which I'm not an expert in that, but their residency rules for what is a resident for GST purposes is slightly different, and so you may end up having to still collect GST and HST, even if though you're a US company. I've done cases with that was the case. And again, sometimes it's just better to collect it and give it to the government than argue with them why you don't need to collect it. So it's especially if you deal with companies as opposed to people, because they get it back anyways. But they also have a question of whether they are going to operate as a corporation in Canada or as a branch from the US, and it's similar rules with branch tax apply as well.
So how does take an Uber, for example, how would that work in Uber in Canada?
So Uber now, well, company or the drivers, let's split it up. The drivers are doing the work standing in Canada, so they're subject to Canadian tax. Uber probably has a corporation, I don't know, but they probably have a corporation in Canada, which would create that permanent establishment. So they probably trap all their Canadian revenue into that company. The other option they could have had was keep their California corporation or whatever state they're in and just operate from that as a branch and then pay the Canadian plus branch tax. So it's one of those two options they had.
Interesting. Here's a very interesting question. When to incorporate a wholly owned subsidiary in the US, I guess, is there a benefit like to incorporate a US holdco in Delaware first, then incorporate in another state where acquired? Like what do you suggest is there a rule of thumb here? Like when you
there's actually an excellent question, because we in Canada have something called a federal corporation. They don't have that in the US. Every state has its own rules of who incorporates and what do you do for incorporation. So in one state, if you operate in another state, you're considered a foreign corporation, even from another state. So if you're going to operate wholly in one state, let's say you're setting up a muffin shop in Alabama, you would set up an Alabama company because all your revenue is there. What makes this challenging is when we're starting from Canada, we look at spreading our wings to the whole US and try to do as many states. So we want, and how state corporate tax works is once you're connected to that state, you then have to pay tax on state and get a credit in your home state. So you kind of play with the tax rates a little, and you want your home state to be the least tax possible. And there's about 4 or 5 states that had 0 state tax for corporations. And so we use those states to incorporate as the home state. Delaware, we always see on TV and everything because they have special rules with public companies. So a lot of big companies incorporate in Delaware. We do it often. It's a fairly inexpensive way to incorporate there. And then we have to what's legally called qualify in another state to do business in that state if you connect it. And you pay a fee and you register as a foreign corporation. One really important part about corporations, for kind of putting my law hat on, is every state in the US has a rule that you have to have what's called a resident agent in that state to collect a lawsuit. And this goes back to before travel was very popular. And if somebody's, swallowed a finger in their Coca-Cola in California, they didn't want to have someone fly to Delaware to serve a lawsuit. So if you operate in that state, you have to have somebody in that state. So there's services I use, for instance, I have an office in all 50 states and we just pay them a fee and they use that. They're called the resident agent in every state. And so you need to make sure you have all that dealt with.
Interesting. Mark, I think you mentioned you get involved too in litigate. You do litigation or support litigation. That's part of your service as well.
Yeah, mostly for tax side. I've done some employment litigation, and on the Ontario side, I do family law litigation, which isn't as exciting as tax, obviously. But yeah, so I do. I do. I've gone to the U.S. Supreme Court with the tax litigation. It's an interesting process because it's federal tax generally, and there's a interesting procedure and difficult procedure to get through, but it's good.
I'd love you to share. Give us an example of where a litigation. Can you share a litigation? Without naming names, like a litigation story that would be interesting.
Most of my litigation involves penalties that people were assessed for not following the rules, and people here are surprised by it. And I told you the penalties are very severe. There's a couple forms that if you don't file the form and there's no tax on the form, it's just an information form, and one day later not filing it, it's an immediate $25,000 penalty.
Really?
And so yeah, so people don't like that as much. And so I do a lot of penalty abatement where we try to, and it's not usually successful, but we try. Sometimes we're good at it. And that's the cases I've taken far through appeals, is where I've argued that it's unconstitutional, that excessive kinds of penalties, and that these are non-appealable penalties. And I argue that it's against the Constitution with due process. So, so my best advice is to follow all the rules at the beginning, pay a little bit to have a professional provider do the right rules, and you'll not be, and some of the penalties are like half of everything you have. Like, so there's huge penalties there.
Yeah, because it sounds like the moral of the story is if you're planning to do business, if you're planning anything across border is to basically contact you as make sure you're set up. You know what I mean?
Yeah.
Because it
It's
comes
easier at the beginning and then at the end.
come back to haunt you later.
Yeah, yeah, you know, a lot of people come, they've already, because it's easy on the internet to be your own tax accountant and doctor and dentist and all that, is you just keep looking up things, and a lot of what you read online isn't with the mind that there's Canadian tax involved, and so there's really good articles written by very good U.S. tax lawyers, but they don't know even where Canada is, let alone what the tax is, and so that's why you need something that's thought of that when you're reading these articles.
This is very enlightening, Mark. This is very enlightening. Very enlightening. So how do people, let's say people are on here, on the participants, where do people find you? If they have a tax,
Well,
where's the best place where do they find you?
well, I'm always working, so here.
Yep.
You can find me at my website, my last name, FEIGENBAUM law.com. You can email me, mark@feigenbaumlaw.com. My phone number, you can pop up. You know, email is best because these are complex situations usually. And I'm always happy to give a quick advice and everything. And if you want something more involved, then we'll talk about, you know, I have specialized software that goes through all the states and sees where sales tax needs to be applied, where like there's just so many jurisdictions that you have to kind of figure out what it all applies to. And it's kind of unfortunate. And the US have been arguing in Congress for years that it's just too complicated for a small business. But them arguing about it doesn't really help the current situation very much.
Interesting. One last thing before I go, is there anything you want to share that we perhaps didn't cover? Like I always look at what's the one takeaway that, even if it's repeated, what's the one takeaway that everybody can have from attending this event?
Well, my number one takeaway I told you is don't set up an LLC. The second one I think is plan what your business flow is going to be. Because I always ask these kinds of questions and they sound weird questions, but if I want to be a customer of yours, how do I find you? How do I order a thing? Where does my goods come from? Who do I pay? And then once you have your kind of workflow or your purchase flow, then I can look at the tax implication of doing that, and either we can tweak it a little bit or just comply with what you've done.
Very interesting, Mark. Very, very interesting. You know what I mean? Very interesting. I have just one more question here that was just
Sure.
before we head out. Just want to look at this. Where can we find the election to file in under the U.S. Tax Canada Treaty to elect that our business is not taxable because we do not have a permanent establishment in the USA?
Sure, I can do it that quickly. The election's actually Form 8833, and it looks like a blank election because there's just a bunch of lines, and you fill in a blank saying like I'm from the country of, and you put in Canada, and then you say the treaty article, and it's Treaty Article 7, and they do it by Roman numerals VII, and it says that it says business profits payable to not a permanent establishment are taxable. So you say, I don't have a permanent establishment, which is Article V5, and this is my story, and it's just a bunch of lines. Now, the problem is you just can't send in the election. There's no way to just send in a sheet of paper, so you kind of have to attach it to a tax return, even if that tax return is mostly blank, because it just has your company information on there. So you attach it to that, you send it in, and you'll never hear from them again. And they have 3 years to say you do have a permanent establishment. If not, you're set.
Wow, wow, wow. Well, Mark, this has been very, very insightful. You know, very insightful, very insightful. And you know, it's just by interacting with you for the 30 minutes. I see there's a lot of complexities.
Yeah, but I didn't want to scare anybody either. They can all be mitigated. And I did start off saying that people really do want to sell to the US. It's a very big place that they love our products. So.
Yeah. I just want to check before we're going to. Anyways, Mark, it's been wonderful. Very, very good. I want to thank you for taking the time.
Yeah, and if anyone needs any of my help with doing Canada, US, I do both Canadian and US returns and consulting and everything, let me know.
I will, and they can always reach out to me for your contact information. And I want to thank everybody for today. And before we end it off, tomorrow we have a really good event. We have a banker and evaluator talking about business valuation, digital cash management, BMO. You don't want to miss this, okay? That's a really cool event we got coming up tomorrow. And I really appreciate everything, Mark. And everybody have a wonderful day. And thank you for today. Thank you. Take care. Bye-bye. We're gone. Bye-bye.